Hey, everybody. So, lesson number one, Green Tin Financial. It's an exciting day. So, we got the Mariners up top, we got the Longhorns down below. Hook 'em. Go Ams. Let's learn some finance stuff. I find the video usually works pretty well. So, here's what we got. We got this lesson today. Let's move this up top. It's called Smaller Buckets. So, it's a little Green Tin Financial knowledge for you. How to get clarity on your sales numbers and help you make better decisions in your small business. So let's get into it. Here's our focus. We want to know where our money's coming from. So in our situation here that we got laid out on the slide deck is you own your own wedding venue. You're the owner, you're the operator. Kind of how I built this business is for the owner operator who needs to get their time back. So you run weddings, you have an event space, you have short-term rental property, and you do like bridal showers, baby showers, that kind of thing. So with all of those different things that you do, you need to know, okay, where is all this money actually coming from? Where are the dollars and cents coming from? What am I actually selling the most of? So we need to get clarity on your revenue distribution. So how we're going to do that is we're going to organize your accounts so that you can track each stream of revenue. So here's where you're at, and here's the change we're going to make. So everything is currently set up under an account called venue sales. That's fine. You're the owner, you're the operator, you set everything up. You set everything up under venue sales so that you can just see a raw number at the end. So what we need to do is make some sub accounts so that we can track your different revenue streams. So what we're going to do is we're going to do what's called a master account or a parent account, which is going to be venue sales. So you'll see that right here. It's a parent account, which under that you will have your 4 different revenue streams. So step 1 is weddings. So that's 401 here. Short-term stays, 402. Corporate events at 403 and parties at 404. So now when we make a sale in each of these things, we can keep track of them. So here's the difference for you. The difference is you can see which categories are driving the most revenue for your business in plain numbers and in graphs. So part of what we do here is we don't just give you numbers, we put these graphs together so that you have something that you actually want to look at. Most financial meetings, you leave them and you're like, I just looked at a bunch of numbers on a page. This will give you a little bit of graph and we'll color coordinate it so that it tells you a little bit better story. Most finance people aren't super relatable or kind of dry. So we're trying to change that a little bit. So in this example, I just came up with some numbers here that are going to help you, get some insight into this situation of how we could help you and how your business can grow. So in this year, a fiscal year 2026, let's say that in your weddings category, you sold 200 grand worth of weddings. So you see that on your graph here. Then in short-term stays, you sold 80 grand. In corporate events, you sold 40 grand. And then in parties, bridal showers, that kind of stuff is 15 grand. So you see down here at the bottom, your total sales is 335,000 bucks. So that's really good. But before, what you would see is just this number, just this big number. You wouldn't have seen this distribution because everything would have just gone into one big account. Now they go into 4 that feed the top account. So then you can see your revenue breakdown is 60% of your revenue comes from weddings, 24% comes from stays, 12% from corporate events, 4% from parties. So then down here at the bottom, you get another chart where you can see your totals. You can see these color coordinated and the percentage of which each of these are. So the thing with this is that you can actually set an actionable goal here, right? So it's just like statistics in baseball, right? If you know that your on-base percentage from the previous year was X number, now we want to bump that up maybe 50 points the next year. That's good intel to have, right? So for our business, we're going to take the same approach. We're going to say, okay, maybe for you, I don't make this decision for you. You run your own company. I'm just providing the information and telling the story, okay? Maybe you want your corporate revenue to jump from 40 grand to 60 grand, okay? Well, you'd have never known that it was only at 40 grand this year if you never measured it. So if you measure it, now we can address it. This is the type of thing that I think most businesses know that they should be doing, but I don't think that they all are doing. So something to think about here. I think it's useful. I think it's helpful. So then our last piece here is that if this is something you're into, check us out on socials, the Gram, LinkedIn, Facebook, whatever you're into. Check us out on there. And then if you want us to take a look at your books, it's just me, okay? Just me. But if you want me to take a look at your books, go to the website. Let me know, and I'll see you out there for another one. So thanks, guys. Appreciate you checking in.